We're going to be talking about the importance of tempo today. Tempo is extremely hard to define, and the only way you really understand tempo is through many observations. And that is really one of the important factors and advantages you get from participating in a perspective and having somebody monitor each day. What I'm going to show you today is difficult because it is a day when I let other objectives get in the way. I saw and I read the tempo correctly, yet I did not act on it. And I turned a profitable morning into a loss. I think it's important to show you these things. So a lot of times when people enter into these courses, they feel intimidated because they think that the people teaching these courses, have it all figured out. Remember, we're human. We make mistakes. What I hope is that you learn from this mistake and that also it allows you to be less intimidated when you get involved in these educational programs. All right, so prior to starting the review of the 10th, let's walk through the pre-opening perspective. One of the most important things is that you are aware of the economic events that are scheduled to take place on the day you're going to trade. And there's multiple places where you can get those events. One of the important things leading up into the 10th was that Chairman Powell was set to address the House Financial Services Committee. The background is that recently the Federal Reserve has been talking about the potential, not the promise, but the potential for rate cuts. The world has assumed, that meaning the trading community, that first rate cut will come in July, and they build it up in their mind that it's going to be 50 basis points. We'll see if that is what's happening. Now, Chairman Powell is scheduled to speak to the House Financial Services Committee at 10 a.m. Eastern, which would take place just around the time that the market opens. When they have these addresses, it's not uncommon that the speeches are released ahead of time. So by the time the market opens, there's been a release of that speech. If you look at the overnight activity, we have a prominent point of control from overnight. However, look at the spike that comes prior to the opening. So the overnight market has spiked up prior to the opening. More than likely that is because the report has been released or the written address has been released. So when we are ready to see the market open, the odds are that it's going to be a gap higher opening. If you look at the 9th, there was a very prominent point of control on the 9th. The more prominent a point of control is, the higher the odds are that it will be revisited. Just odds, not assurance. Also, there was a prominent overnight POC. Prominent overnight POCs always have good odds of being revisited. Now the market gaps higher. A gap is more important than the prominent points of control. A gap is an indication of change. Prior to the opening on the 10th, the all-time high has been made in the electronic market. As we have written, it can last for some period of time. However, the odds are against overnight highs, serving as the end or significant end to a longer term auction. At the same time that we are prepared to trade on the 10th, all auctions are up and the market is flirting with 3,000 in the futures. All right, Jen, let's go ahead and let's see how this market opens. You're going to see that the last trade in the overnight activity is near the upper end. So the odds are that we're going to open higher or gap higher. An important piece of information: if a higher gap is to be filled, the market will usually fill that gap from the opening. If the market doesn't fill the gap immediately, the odds are that the gap will not be filled, and the odds are that value will be higher for the day. Two of the most important factors we deal with are value and tempo. There's other things that are important too, but these are extremely important. So the market has gapped higher. We are replaying this session at 7 times the normal speed. So keep in mind, it's 7 times faster than you would see it if you were watching the opening. The market has taken out the overnight high. The next high, you'll see the 3,000 level. Markets are extremely visible, so they will be easily focused on the 3,000 level. So you see the market hesitating right at 3,000. You see it hesitate. You see it sell off, just a couple ticks short of 3,000. The odds are very low that that will remain. To be that mechanical now, it's exactly at 3,000. And now it's taken it out by a couple ticks. So we said the odds were low that it would remain. The odds are also low that it would take out 3,000 by just a couple of ticks and have a lasting sell-off. Can it happen? Of course it can, but the odds are against it. Okay, so now you see the market has come back up a second time up above 3,000. So the first thing that I am recording as I'm trading this morning, the market has gapped higher, but the confidence on the run up isn't particularly high. The confidence isn't there, and also the tempo on the run up isn't very high. Notice we went to just short of 3,000, sold off. We looked above 3,000, sold off. The market came back down, no real follow through to the downside. So the market, they're looking at the 3,000 level. They're very much aware of the overnight high, as well as the high that was made on the 4th of July, which is just the little short range that you see. The electronic trade early in the morning, even though it was a holiday in the US, there was electronic trade relative to overseas markets. All right, so again, I'm recording that the market really, it didn't just open and move higher with confidence. It's been, the tempo to the upside has been slow. So with that slower tempo, I'm watching the market trade higher. I'm watching the all-time high. And in my head, I'm thinking that this confidence is relatively low. If we fail anywhere near the all-time high made in the Globex market or the electronic market, I am mentally prepared to buy some puts, simply because I really don't think the confidence is there. It's very, you'd say, but Jim, you're going against a gap and you're going against higher value, etc. And yeah, that is absolutely true. But again, I'm recording that the tempo to the upside isn't very convincing to me. So now we go up and the market's just a couple ticks shy of the Globex high. Now we've taken it out by a couple of ticks. So we now have an all-time high that's been made in the pit session. That is usually a more meaningful high than one that's made in Globex. So the market's continuing to be higher. I'm reading that the tempo is relatively slow. So we've looked above the all-time high made in Globex. I have gone out and I have bought 29.80 puts. Not a lot, but I'm just thinking that the market was didn't have that confidence this morning. I had a very prominent point of control on the 9th, which I showed you earlier, and an overnight prominent point of control. Now, for this trade to work, it needs to work fairly quickly because I'm against value, I'm against the trend. So it's not something that I'm terribly comfortable with, but I didn't pay a lot for the puts. And remember, I'm also thinking that the confidence on the 9th wasn't very high relative to that very prominent point of control. All right, so remember, a period high, we have excess above the all-time high made in the Globex market. Now I'm watching very closely to see what happens on the downside of this trade. If there's anything here, I have to go down, and relatively shortly, I have to go back down, get below the overnight high, and I have to get down and take out the early morning A period low. So the market, the excess made in the all-time in the pit session is holding, and it's above the all-time high from the Globex market. Market's trading off, but not real strong. Look at the white line just above 3,000. That's half back. So what the market will be looking at early this morning will be half back, and the half back is almost the same as the 3,000 level. The 3,000 level is a very mechanical level, particularly for traders that are extremely visual as they trade. Okay, so we're looking at B period is inside A period. It's a form of balance, and you can see the market's bouncing just from right around half back. Very mechanical. Again, when we see the markets bounce and focus on those mechanical levels, it tells us that the people in the market are shorter term traders. Longer term traders don't pay any attention to those, either longer term traders or investors don't pay any meaningful attention to those mechanical visual references. So the B period low is weak, and it's considered weak because it's coming from exactly a reference, and that reference being half back. And that reference of half back is also just slightly above the 3,000 level. So you see we've come back, we've taken out the B period low, and the market is still, the B period low is still weak because it's just a single tick above 3,000. Again, a very visual reference. And again, it gives us some indication of who is trading this market. So the references on the downside are weak. So I'm feeling fairly comfortable with my trade because the downside references are very weak. One was from half back, and now we're a single tick above 3,000. Again, that is not strong buying. Okay, remember, we're playing at 7 times the normal speed. The next thing would be to take out the 3,000 level, and then we're looking at getting back into the overnight range. So you can see we've come back to that exact 3,000 level. As we talked about, the reference was weak, and we've come back down through it. So now the 3,000 level remains in play, but the most important thing now is we're looking at the overnight high. Anything meaningful on the downside, we will get back into the overnight range. Now, what is important? I recorded that the tempo or the confidence going up early on wasn't very convincing, which led me to buy my 29.80 puts, and I bought them at a relatively cheap price. So now we're coming back down, and I said the next reference would be, on the downside, would be the overnight high. So B period is an inside bar to A period. B period is a form of balance. One of the trades that we talk about on a short-term balance, on a short-term basis, is to go with a breakout from an inside bar. Now, we don't do it all the time, but it's certainly something to think about. The B and C period lows are weak because they are a single tick above the overnight high. So the chances are really good that we're going to come back down through the BC low into the overnight range. If we come back down through the BC low, that means we also have good odds of taking out the B period low, the inside bar. Now, at this point in time, I'm feeling very comfortable about my put buy. That should be recorded as a problem because the confidence that we're seeing in here has not been high. And remember, I said when we opened, if a gap is going to be filled, and particularly a relatively large gap, if the gap is going to be filled, it's going to usually be filled very early, because if you fill a gap, the next thing you need to see happen is see value building to at least unchanged. The longer it takes to fill a gap, the lower the odds are that you will get lower value or unchanged value. So right now, I'm feeling fairly comfortable with my trade, but I shouldn't be because the tempo and the confidence is not high. Remember, we are playing at 7 times the normal speed, but even at 7 times, the confidence is not there. But one of the things that happens to us sometimes, we rationalize what we want to happen versus what is happening. That is an extremely important distinction that you need to make. Okay, now the C period high is one more time gone back up above the 3,000 level. If this market were really weak, that's not going to happen. You break down below the 3,000 level and you start to really get some selling in there. But for some reason, I'm still feeling confident. I'm not recording, as I should, that the tempo to the downside is weak. I had a wonderful opportunity when we came back above the overnight high to take profits and just step aside. I didn't take that because I have a bias now and I'm feeling overconfident with my trade. Again, very, very important to understand. Now, remember, I put the trade on initially because I didn't think the confidence on the upside was there. And we took out a significant reference and we failed. All right, so now we've come back down. C period is below the B period. So we're outside of the inside bar. The next reference would be the early morning A period low. If there's anything here, we'll come down and take out that A period low. Now let me point out, if this market were really as weak as I want it to be, not as it is, we would have gone down and taken out the A period low much quicker. So the tempo, and it's confidence, but if you look and think of the tempo is just not there. It's been down, it's been up, it's been down. But now we've taken out the A period low. So now it's important to understand, I'm feeling even more comfortable, right? And I've got in mind that prominent point of control. One more time, D period took out the A period low. If the tempo was really good, we'd have gone through that and really not look back. But we did look back. We came back through the opening price. The point of this recording is to stress the importance of tempo. It's also to stress the importance of errors that we make because we have things we want the market to do versus what the market is actually doing. We still have a gap. Value is clearly higher, and the odds are that value is going to be higher before the day is over. We have another potential trade, C period, going short because we're outside of the inside bar. So that's a legitimate trade, and the trade is working right now. Now we are one time framing higher since the high, so it's looking pretty good. And D period is extending lower, and now we get a pretty good extension on D period. And so right now, let's stop it for a second. What I hope you're feeling is this mixture of things that I read that the confidence and the tempo was not good as the market rallied following the higher gap. If the market were really that strong, it would have gone up with more conviction and better tempo. It went up in a stutter step type of manner. We sold just below 3,000. We went and looked a couple ticks above 3,000. We sold off again. We finally got above 3,000. We went back up to the Globex high. We finally got above it. Look at the B period high. The B period high is a single tick below the prior Globex high. That is a sign, not a sign of weakness. That is a sign of mechanical selling, not a sign of good, strong selling. But remember, I'm staying with my trade. I had a bias. I thought the tempo going up early on was weak. Turned out to be a good read. But now the tempo / confidence on the downside is actually even weaker. I'm in my trade right now. The trade was put on someplace when the market was around the 304, 305 level. Market's trading 29.91. A very nice profit in the puts. I'm feeling very comfortable, and I'm focused on the prominent point of control from the night. Can we move the screen so we can see that very prominent point of control? Okay, down there at the 29.78 level. I don't have an objective bone in my body at this point. This is the end of the market going down, or very close to it. What I wanted to show you the importance, the tempo on the downside did not support my trade. So what is going against me? The tempo isn't with me. Value's building higher. And unless this gap is filled very quickly, I have a bad trade on. Okay, let's go ahead and play. Okay, so we're still pushing on the D period low. The market is giving me plenty of time to exit my trade, and exit my trade as a very profitable trade. I haven't taken that opportunity. Time is extremely important. The market, there's been plenty of time for me to exit my trade. The gap is not filled, but yet I am biased by the fact that my trade is working. At least I think it's working. That is a bad read. Just because the trade is profitable, just because the price is currently going my way, that does not mean that the trade is working. Am I profitable? Yes, but because I'm profitable doesn't mean the trade is working. The tempo is too slow on the downside. We are not filling the gap. The market's continuing to trade lower, and yet the gap is not filled. So I've had plenty of time to fill that trade. The tempo is not there. I should be exiting that trade. I should use the time to exit the trade because the tempo is not there. These are the things that cause you to turn a profit, it could be in a very nice profitable trade, into a losing trade, because this trade should not have been kept because of the tempo going down. One more time before we stop, let's review the B period high. The B period high, as you'll see, is a single tick above the previous Globex all-time high. It's only a single data point, but if the selling were that solid, it wouldn't be from such a mechanical level. We saw the B period inside bar. We saw C period look below B, come back in. If the market were that weak, you wouldn't. You just go below it and continue down. So value is higher. The gap has not been filled. This market has given me ample time to get out of my trade. I didn't. The tempo wasn't there. Okay, so what we're going to do now, we're going to shut this off for a second. When we start back up again, we're going to play it at about 25 times the normal speed. Let you see what happened. And I didn't exit my trade as I should have. And then we have another factor that comes in. I now get stubborn. Okay, let's speed it up to about 25 times and let's see what happens from here. So you see this, the market goes into recovery. The gap was not filled. We have a single D period buying tail. The market is now trading at the opening, trading above the opening. E period is an inside bar. Remember, we're playing it 25 times. Very mechanical. It stops exactly at or around the opening. Sells off a little bit. Very mechanical, very weak. And you can see the market is starting to really gain some momentum to the upside. This continues until the market has rallied substantially. What you have seen is a trader, me, who has turned a profitable trade, and a profitable trade that the signs going down did not justify the downward price movement. I didn't respect tempo, and I've turned a profitable situation into, maybe it's not a losing situation, but I've given back substantial profit, and the trade is, remember, when you buy the puts and the calls, you're losing the spread between the bid and the offer, plus you are paying commissions. And what you'll find out when you're trading options is when they're going down, the volatility expands. When they're going up, it contracts. So you've seen a case where a trade, the early trade was all right because the tempo on the upside really wasn't that meaningful. I waited very patiently till it took out the significant references. So there was nothing wrong with the initial trade. It was going against the trend and going against value. There was nothing wrong with that trade because I read the tempo correctly. What was wrong after that was the tempo on the downside. While I read it, and I read the weak B period reference, I had too much greed in mind, and I was focused on the prominent point of control from the previous session. And so I managed to turn a winning trade into a losing trade. All right, that's all we need to do at this point. What I really wanted to show you was the importance of learning to understand tempo and understand how hard it is sometimes to take that and incorporate it into your decision making, because it's not really definable. You only understand tempo by being deeply involved in the market, understanding the references to look at, and it takes time. Again, one of the things that we focus on constantly throughout the intensive. Thank you very much. we're going to record the following day in a little while. And I did something similar on the following day. However, late in the session, the market bailed me out. But 2 days in a row, I mismanaged profitable trades. All right, we'll come back and we'll film or record the next day shortly. Okay, before we start looking at any day, it's important that we step back and make sure we have a perspective of what has happened. We are going to be observing trade on 7/11. Coming into that day, overnight inventory on the 10th is long. You can see it on the right side, and you can see that there's a very prominent point of control. And the prominent point of control is also where late trade takes place overnight. Where late trade takes place overnight is where we're going to open, or approximately where we're going to open on the following day. On the 10th, we had a prominent point of control. You can see down there. And I am very focused on the F, K, and L lows that are within a tick of each other. I thought that was a very poor low, and I'm coming in with a bias thinking that the market will trade back down to that level. Let's go take a look at the next slide. As we begin to trade, as the market opens, it's important to be able to observe relevant references. It's also important to talk about relevant biases that you may have. I've already shared with you the most important bias that I have, and that was the lows that we showed just a minute ago. Once we begin to trade, I want you to retain constant awareness of current trend or short-term trends. We are in a situation where all trends are currently up. Next item, one of the blocks that inhibits profitable trading is the constant search for exacting entry and exit points. The successful trader has a clear understanding that it is far more complicated and complex than just having a simple place to get in and get out. One of the traits that opens the mind to profitable trading is an expanding ability to think in terms of odds. Once you learn to think in terms of odds, you start to replace that need to know exactly where to get in and where to get out. Throughout the video that we're going to be working on right now, reflect on developing value, the point of control, and I'm going to give you some references to keep track of now. You haven't seen them yet, but you're going to see them. So giving you a little advanced look at the day. The early E and F highs, keep a close look on them. You'll find that they're a tick apart. Following that are the G and H highs that are matching. When you have two sets of highs like this, either matching or within a tick of each other, the odds are good that they're going to be taken out. If they're not taken out early, the odds are improving that they're going to be taken out later on. Also, when you have these kind of references, not only do they tell you the odds are, strong that we're going to take them out or trade through them later on, but they also tell us that the odds of getting a real downside windfall are greatly reduced. Doesn't mean it can't happen, but it helps you understand and maintain a perspective of what can happen on this particular day. On the 11th, the day we're going to be looking at right now, once again, I start out with tempo and I do not correctly execute my trades relative to tempo. I read the tempo correctly, but I don't successfully execute my trades. Finally, you're going to see how staying in touch with the market allows me to turn a bad day or a lukewarm day to the downside into a profitable day prior to the end of the session. You will see things like this happen in any skill-based endeavor. It's not uncommon to see a basketball player, a golfer, have a bad start and a strong finish. Why did that happen? They stayed in touch. They never gave up. They didn't throw in the towel and just walk away. They stayed in touch and focused on the market. At this point in time, let's begin to play the 11th. And Jen, if you will switch me over and start it 3 times. We've already said, when I say 3 times, we're going to play 3 times the normal speed. You see the very prominent point of control from overnight. You see that we're just about to open. So we know that overnight inventory is long. We know we're going to open within the previous day's range, and we're going to open near the prominent or very prominent point of control from overnight. When you open within a previous day's range, the odds are that you're going to have a rotational trading day. I talked earlier about the fact that I have a very strong bias. My bias focuses on the 29.9375 level, where we have F, K, and L lows all within a tick of each other. So we also know that overnight inventory is long. We know when overnight inventory is long, the odds are strong that we will have a correction relative to overnight inventory. A correction relative to long overnight inventory would be selling. We also know that we have a prominent point of control from the 10th down around the 29.9750 level, and we know the odds are good that we will revisit that. So the market opens, we are trading lower and have sold off early on relative to the very prominent overnight point of control. At this point in time, the market trades lower, but notice the market has already returned back to and through the halfway level of the early trade. And it is one more time approaching the early morning high. Again, we're within the previous day's range. Within the previous day's range, it's not expected, it's not unexpected to see rotation and early morning chop. We are seeing early morning chop. I'm in a trade and it's not a good trade and it's not the atmosphere I should be in. We do things as traders, we do things like this and they're not always perfect. All right, so right now we have traded lower. We've traded into the value area for the previous session, and we always want to monitor what is today's value or the value on the 11th going to look like relative to the value on the 10th. We've already traded into the value area from the 10th. However, we've had no acceptance at that level. We remain in a rotational environment early on within the previous day's range and within the overnight range. Let's speed it up to about 6 times the normal speed. We've traded back through the opening. And we continue to see chop. Remember, we're playing at 6 times the normal speed that we would see. Notice that the early morning low is just a couple of ticks below half back from overnight. Half back from overnight is a short-term trader's reference. We're always trying to have a clear understanding of who are we competing against in the market. When markets go to exacting levels or very close to exacting levels, that is an indication that those traders that are controlling today's market and we are competing against are short-term traders. Longer-term traders, longer-term money does not stop at exactly half back or close to it. They don't go constantly back and forth through the opening. Okay, the market has rallied again back through the opening and now testing the overnight high. Early morning, first half hour trade low is down around half back. The A period high is just shy of the overnight high. So again, we are showing rotation, we are showing chop, all within the overnight range. Value at this level is building overlapping to higher. We've been in the previous day's value, but there's been no acceptance yet. So we will watch to see what happens to value as the day goes on, and we will continue to monitor the point of control. Point of control, if you think about it, it's the fairest price at which business is being conducted. One more time, back and forth through the opening. Heavy rotation, heavy chop, no real decisions on either side of the market this morning. Overnight inventory is long. We have not seen a meaningful correction relative to overnight inventory. As an indication that the market isn't really that weak. If the market were weaker, you would see a faster, more convincing correction to overnight inventory. Okay, we'll just let this play. How much time do we have left in the first half hour?
Less than 4 minutes.
Okay, less than 4 minutes. So we're trading at the midpoint of the early morning range, and we are just about ready to go into the second period of the session. Still trading right around the opening. When you see that, you have a pretty good idea that there's no conviction either to the upside or the downside. If there's any positive news for a long in here, it is that the value at this point in time appears to be developing as higher. We'll see how that changes as the day goes on. The B period low is exactly at half back, very mechanical, and it's also right at the opening. So the chances are we come back through that level. Remember, we're going at 6 times the normal speed. Let's move that up to about 10 times. So we're walking through this session fairly quickly, but you see, we said early on that the low was at half back from overnight. We said that's a very questionable low. You've seen that taken out. We have now further extended into the value area from the 10th, but there's still no meaningful acceptance down at that level. The next lower reference would be the 29.97 level, which represents the settle as well as the prominent point of control from the 10th. Our main purpose this morning was to monitor tempo. Tempo has not been strong to the downside. You see, we've been back and forth multiple times. With my position being short, because of my bias at the 29.9375 level, I should not be remaining in this trade. The market has given me an opportunity to scratch or make a little bit of profit on my trade. I continue to hold the trade. Sometimes I hate to admit that, but these are things we do. I have the bias based upon the low from the 10th, feeling very confident that that low is going to be taken out before the session is over. Remember now we are going at 10 times normal speed. The market is approaching the point of control from the previous session, as well as the settle or unchanged level. We have shown more acceptance back within the value area from the 10th. Now, using your imagination, you say, what would it take in order to get just unchanged value relative to the 10th? To get unchanged value, we would need to trade sharply lower, and we would need to trade well below the FKL lows. That's the low of the value area from the previous session. Because we have spent time higher, your imagination should tell you quickly that the value is likely going to be at a minimum overlapping to higher today. In order to see that change, remember, you would have to trade sharply below the low of the previous day's value area. Just think about how value changes. You need time and you need distance. So you would have to trade lower and you would have to spend considerable time down there. The more time we spend on the upside, as we have in A and B period, the more important it's going to be to trade down below the previous value area low in order to get lower value or overlapping value. All right, so right now, the market has traded to the unchanged level and to the prominent point of control. If you look closely, it's traded there and traded through there. If the market were really weak, when it traded through there, you would expect to see acceleration on the downside. You're not seeing that acceleration. You're getting some trade down there. The market is targeting the overnight low. And why would I say it's targeting the overnight low? Because markets go to very visual level, or at least they target very visual level. The shorter the time frame that is dominating the market, the greater the odds that the market will be focused on those very mechanical levels. Okay, so we have been back and forth through the opening. We have been back and forth through unchanged, and we are within the previous day's value area. But tempo has not been good. Tempo has been back and forth. It is not good tempo. You may say, but look how low price is. Price really isn't that low. And if the tempo was strong to the downside, you wouldn't see the strong chop and the rotations back through the references we just passed. We back and forth through the opening. Now you see we are back once again to the previous day's settle and prominent point of control. That is not a sign of strong tempo. Okay, once again, as I say, that I have a short position, and any logical thing, and if you were in that, I would say you'd definitely be out of that position. Unfortunately, I've gotten stubborn because I'm still biased to the 29.93.75 level. All right, we are at 10 times normal speed. In order to be able to play this day out, let's speed it up to 15 times. So we're moving, fairly quickly through the day. You have to use some imagination to see what it would look like if it was, trading at regular speed. Okay, well, can we one time frame, or will D period take out the C period high? The C and D periods are within a tick of each other. That's fairly mechanical, means the D period is not an overwhelmingly strong high. Okay, we came back, we have matching C and D period highs, not a sign of strength. D period is now traded to within a single tick of half back for the day. Again, that is a weak reference. We've now traded back through it, and we're continuing to see rotation consistent with opening within the previous day's range. We are almost back to the opening price. Couple ticks through it, continue to get rotation. Notice we have not taken out the overnight high or the overnight low. So both the A period and C period references, the high and A period, the low and C period, are very mechanical type of references, just short of very visual references. And we know that is an indication that the trading that we're seeing today is being conducted by relatively short-term day time frame traders. Their behavior, it's important to know and recognize that their behavior is quite different from more serious longer term traders. All right, one more time, we've changed time periods. Again, we are still back and forth through the early morning opening. Value is building, is overlapping to higher. E period rallies, targeting the A period high. Doesn't mean it's going to get there, but those traders in E periods, that's what they'll be looking at. The market continues to show a lack of confidence. Value builds overlapping to higher. The ability just to be able to take it all in and to observe the highs, the lows is extremely important. You want to get a larger view of what is going on in this day. We start off, we know the one view is we're within both the overnight range and the range from the 10th. So there's no real meaningful change relative to the previous day. The biggest opportunities are going to come when there's change. Change is going to be the greatest when we're outside of the previous day's range. When we are trading within the previous day's range, we're looking more for short-term trades and looking for more short-term trades, but of lesser magnitude. E period continues to attempt to trade up to the A period high as well as the overnight high. So far, it's unable to do it. Okay, one more time, we've changed time periods. We've now entered F period. F period is within a single tick of the E period high. I called your attention to that earlier and said that, when you have two highs that are relatively close like that, you want to keep your eyes on them because they're not good highs. And the odds are increased that they will be taken out now, or if they're not taken out now, later on in the session. So also, when those highs exist that aren't, high confidence highs, they also contribute to lowering the odds that you will see anything really meaningful on the downside. Doesn't mean you won't see short-term trades, but odds work in both ways. Odds of the market trading lower, as well as odds of the market trading back up to that level later in the session. I pointed these out ahead of time, which, you normally don't have that advantage, but I think it's helpful to see them ahead of time, understand you should be keeping your eye on them, and understand that they do figure into the complexity of being able to think in terms of odds. So the E period, F period, high is questionable. F period is trading one more time back and forth through the opening. Again, you get an understanding that there's very questionable activity today. No real confidence. You notice that half back level, it coincides, the daytime frame half back level coincides with the half back level from overnight. So there's going to be two references at the same level, and the market will be using those references, and we'll be using them in order to kind of judge the tempo as well as the confidence in this market. So far, tempo has not played in. Tempo has been weak on the downside. It has been weak on the upside. So tempo is not really a factor in here today. The market continues to hang around the early morning opening. And why? Traders know where the market opened, and they'll continue to focus on it. It becomes very mechanical. A lot of times people say, well, why does that happen, Jim? And there's no answer other than that's just what happens. Traders know that. They know where the market opened. They're looking at that. It's a focal point, and it's easy. It's an easy number for them to retain. Remember, at this point in time, price and value are higher. So that means that, the machines, from a short-term trader's aspect, machines are going to look green. Green just says, hey, prices are mostly higher. Red would say they're lower. When prices are mostly higher, meaning they're green, traders are a little bit more enthusiastic. Okay, early on, we said we needed to look and keep our eye on the EF high because there was a questionable high being within a tick of each other. So it's not a strong high. It's very mechanical, meaning that the sellers in F period were selling just a single tick below above the E period high, not a sign of strength. Also keep an eye on the G and H highs. They match. So now we have matching G and H highs and E and F highs within a tick of each other. Both of those are indications that the selling is mechanical. Both tell us that the odds of significant downside are low, and also that we will come back through those levels. Not that we will, but that the odds are high that we will. This is complex. You say, well, wait a minute. We've got those 4 half-hour bars that are, at very mechanical levels, but yet the market's going down. Yes, the market is going down. The H period low, notice where it is. It went 2 ticks below half back for the current session, as well as half back from overnight. Again, it's important to understand the confidence level on this day is very low. Traders really don't know. A lot of chop back and forth. There's some traders want to buy it, some want to sell it. There's a tremendous amount of confusion in this market. Now, also, we remember in the first slide, we said, remember, all trends are up. All trends are up, the long-term trend, intermediate, all trends to the upside. So we've not seen any indication of real selling. We've seen some liquidation, but no real selling. Okay, remember, it's pretty fast. We're trading at 15 times. Okay, the market is moving down, and it's now moved once again to the unchanged level, which is also the prominent point of control from the previous session. We, once again, are back within the value area from the previous session. Notice that the current point of control is substantially higher. We are now trading below the point of control. Okay, now let's stop for a second. If you remember that I have been focused on that level. I didn't like the low from the previous session. The FKL lows all within a tick of each other. I saw that as very mechanical, and I saw it very strong odds that the market would come back and trade through that level. If you remember, I came in with a short position. Look at the ABC ranges. That position was profitable at one time. The market then rallied all the way back towards the high, making that an unprofitable position. So I had no reason remaining in the trade. The tempo wasn't there. Value wasn't clearly building lower, but yet I stayed in the trade. So at that point in time, at one point in time, I had a profitable trade, and the profitable trade got turned into a losing trade. So again, these are things that happen, but I'm still remaining in touch with the market. Remember, I have short-term focus on the level we're currently at, the 29.9375, and I see high odds that we will rotate back through the GH and EF highs. All right, before we start to play again, the FKL lows have been weakened further because the I period traded exactly at that level. All right, let's go ahead and play. So the market is rallied almost back to unchanged. Again, confidence is not high, but that low is weaker than it was because of the I period trading down to that level. Notice it's not high. If it was high confidence, we would have traded through that very quickly. It traded down there and stopped. All right, let's stop again. At this point in time, we took out that low finally. The more difficult it is to take out a reference, the lower the odds that there will be significant downside. In this case, if the reference were on the upside, the odds would be lower that we would see significant upside. So on this reference, we see very low odds that we will see meaningful downside because it was difficult to take out. Also, we are well within the previous day's range. Value is building, overlapping to higher, and notice that the point of control still remains considerably higher. There is enough time left in the day that the point of control could be pulled lower, but the odds are against it. So value, the odds are value is going to be overlapping to higher. The odds are we're going to trade back through the GH and EF highs. Doesn't have to, we're only talking about thinking in terms of odds. Now, at this point in time, I don't remember exactly what I did with the earlier trade. I believe that I came out of the earlier trade with a loss or a break even. I just don't quite remember it this time, but I know it was not a satisfying day. Now I've stayed with the market. At this point in time, I now go long the market, short-term long position, long the market because value is overlapping to higher, the point of control is higher, and my belief that the EF and GH levels can be retested. All right, let's continue to play. A little test of that low. The low held. Still a choppy day. Remember, it's still an inside day. The market is once again approaching the unchanged level. The last rally was just to a tick or so short of unchanged, which again was very mechanical selling coming from that level. Remember, we're at 15 times normal speed. So you see the market, tested down towards the low once again. Notice the point of control. Jen, if you can point out the point of control as a reminder. The point of control is up just below the opening. So the point of control still remains substantially higher, and particularly as we get later into the session. Market is still pressing to the downside, pressing hard to the downside, but yet value is more than likely going to be overlapping to higher. The point of control has not rotated lower. Not high conviction, but when the point of control hasn't gone lower and the market continues to trade lower, the market could be getting itself too short. We trade back down, we trade back through the earlier reference. Say putting a little pressure on me because I'm still long the market with the belief that there's a good chance that the market will rally prior to the end of the session. Remember, I am focusing on value and the point of control. Point of control is the fairest price at which business is being conducted. If the fairest price does not rotate lower, the odds are that traders are getting short at poor prices, or what we call short in the hole. So the market getting one more time back up towards the unchanged level. All right, let's stop here if we can. I think we're going to see, if I remember right, when the market gets up near the unchanged level and the half back level, I exit my long position, which was a futures position, and I then switch that position to a long call position. It's just one way of controlling risk. All right, let's continue to play. So the market is back to unchanged. Again, it's every time it's got around the unchanged level, we've been back and forth. Traders not quite sure what to do. That we're getting later in the session. Look at value. Value is overlapping to higher. The point of control remains higher. One more time, the market is looking at the very mechanical level of half back. When you have an inside day, which is generally controlled by very short-term traders, you will see mechanical references being significant on a short-term basis throughout the session. The K period high is just a tick below half back for the session. Again, a very weak high. And then the market one more time trades back down to the unchanged level. Okay, so we're going to play out through the rest of the day. Not an easy day to trade, but it has been a predictable day. It's been an inside day. Inside days are generally rotational, generally choppy, and then we add on to that monitoring value. Value remains overlapping to higher, as does the point of control is higher. So now you have a momentary chance to lower the point of control. You can see where it's green, and it's about where the market is trading right now. In order to maintain that lower point of control, the market will need to stay below the half back level. Any trade above the half back level increases the odds that we rotate back up to the initial point of control. So I said earlier that the K period stopping just a tick below half back was a weak K period high. Now, and it's been taken out. L period is exactly at half back. That's another weak high. And we still have our GH and EF highs that we've been following all day. Those references all day long have been meaningful to me to tell me that the market really doesn't command strong sellers. All right. L period high is weak. Again, we showed you the slide before the market opened. Go back and review that slide. It's not easy to be able to keep focus on a day like this. It's higher, it's lower, but it's possible. As you get better and better at trading, you will be able to maintain these references and be able to do some type of internal calculation of the odds. If I've looked at this day and it has been high odds that I believe that the market prior to the close will rotate back higher. Why? Because of the weak references on the high, value being overlapping to higher, and a belief that we will not rotate lower with the point of control, although clearly possible at this point. Okay, M period opens. Again, now we have KLM highs, all within a tick of each other, could set off the firecracker effect, meaning take out one high, it triggers the stops from another high, triggers the stops from another high, etc. The half back level is holding both the L and M highs, very weak at this level. Very weak references. Again, unlikely that will hold throughout the session. Notice how visual the market trades. Notice how mechanical it goes to these exacting references. We said earlier, thought because of value and the point of control, there was a good chance traders were getting this market too short, or said another way, short in the hole or short at poor prices. When the market's trading lower, if they're good shorts, you want to see the value area and you want to see the point of control come down consistent with the lower pricing. Okay, the market's almost closed, the M period. Now we'll have the runoff in N period. Notice the importance of having focused on those early morning highs. Whether those highs are taken out or not is not relevant. What is relevant is that information, those highs, tell us that any selling in here was probably done by very short-term traders, and the shorter the trader, the more likely that they will reverse their position at the first sign of any reversal in there. And you can see that's exactly what has happened. We've taken out the G and H highs, so those have been taken out. All right, it's been a difficult day to trade, extremely educational, because you will come across these days quite often. Go back, review the first slide that talks about the overall perspective. Then go review the second slide, which we gave you a look at what the day was going to look like ahead of time, so you were able to better follow it and focus on what was going on. Go back and replay a day like this several times until you have command of it. Once again, thank you.